Most traders don't lose because they're wrong, they lose because they assume a break means control change. Welcome to Mastering the Sweeps, a Nuevo Voz trading series. Here we apply the lighthouse strategy, a disciplined approach to observing liquidity, structure, and probability in the market. Remember, your job is not to find trades, your job is to observe the market until it reveals one. Welcome back, and I'm super excited to share this amazing information, this just everything that I have planned throughout the week. I've studied, I created these charts just for you. I know that you're going to love it, and you know I got a challenge for you. So let's go ahead and get started because I like to keep these videos at least 20-25 minutes. That's kind of pushing it. So let's go ahead and get started. This episode is all about change of direction. We're breaking down what fake versus real change of directions look like, how they behave, and everything in between. So, most beginners think this: price broke structure, so the market changed direction. But that assumption is exactly where people get trapped because sometimes price do break and nothing actually changes. This lesson is going to help you stop reacting to every break that you see. This is not just about trading, guys. This is training how you evaluate behavior before making a decision. And that was low key a gem if you want to write that down. This is not just about trading. This is training you how to evaluate behavior before making decisions. Because trading, if you break everything down, trading is all about making decisions. By the end of this, you will know how to tell if a change of direction is real or just a trap. Today, we're not just learning predictions, we're learning classification. Your goal is not, can I guess where price go? Sorry, can I guess where price goes? Your goal is, can I correctly identify whether behavior actually changed? Last week, you learned displacement. Now we're going one step deeper. And with displacement, you learned about strong movement, weak movement, clear movement, choppy movement. But displacement alone is not enough, guys. So now we ask, after learning this lesson, did the movement actually create a shift in control? And not just any shift, a real shift in control. So, the question is longer, remember, okay? Remember, the question is no longer, did price break? The real question is, did control actually change? So, a break is easy to see. What's harder to see is, did buyers or sellers actually take control after the break? Because price can break structure and then immediately fail. That's why behavior after the break matters more than the break itself. And not every break is real. Structure can change without control changing. And this is the biggest mindset shift in trading. Structure changing does not automatically mean control change. Sometimes price only creates a temporary reaction, a liquidity grab, or a fake shift. And if you enter too early, you become liquidity, meaning they will take your money. And we don't want that, okay? So, let's break down what is a change of direction. A change of direction is when price breaks structure and appears to shift direction. Okay, so you will see this acronym a whole lot in my channel. That means change of direction. This happens when price breaks a previous structure and appears to move the opposite way. But remember, appearance is not confirmation. And for my visual learners, I got you. Stay with me, okay? Right now, we must break it down so that when you get to see it, you will understand it a little bit better. Okay, so stay with me. All right, so we're breaking it down even more. It's not just a break, it's a break that must hold. Okay, it must hold. And this is a simplification I want to burn into your brain. A real change of direction is not price. Oh, price broke. No, no. A real change of direction is price broke and behavior held afterwards. Okay? One more time. A real change of direction is not just, oh, okay, price broke. No. It must break and behavior must hold after. All right, so now let's talk about the fake versus real change of directions. Okay, because this is where most traders get trapped. They see the break and assume it's real. That's an emotional trap. Most traders see, oh, I have one strong candle here, one break here, and one reaction here, and then immediately assume it's reversing. Oh my gosh. But professionals, they wait for behavior, and you're turning yourself into a professional trader. Whether you are trying to go to a broker firm, that's on you. But how I see a professional trader, you get into the market, you're profitable repeatedly. Okay, that means you're a professional trader. You can earn your money from this skill. Okay, so notice how the market rewards patience more than excitement. That's what I want you to do now that you are in your observation mode. All right, so for my visuals, people who like visuals like me, I got you right here, okay? Everything is about to come together. So, before we even look at this visual, remember, we're looking for an approach, which is going towards a liquidity sweep, a weak break, rejection. Because remember, this is fake. This is what you're not going to enter. Because one thing about me, I don't just teach you what to look for. I also give you the tools so you'll know what not to enter, what not to do. All right? So remember, you are not entering on these type of trades. Everything will stay the same. You will still have approaching, which is liquidity, but this part will have a weak break and a rejection. All right, let's look at it. Here, and I'm gonna go slow on this and screenshot this too. All right, here's your key terms. So if you don't know some of the vocabulary, look here, especially if you're kind of new. Okay, so price breaks, but what happens after? Right here. So you see price is in consolidation right here. It did approach, it had its liquidity sweep, and then the displacement. But you see how choppy it is. You see long wicks. What wicks are the lines, just to make it simple, and these little skinny lines that come from the boxes. The boxes are your candles. That's what we call it. All right, but you can see it's blue, then red, and blue, then red, and blue. It's not just all green, all blues or all reds. And I broke those candles down. We do not call them blue and red candles. The correct term is bullish for the blues, bearish for the red. Okay. All right. And then now that I said it, I'm going to incorporate it so your mind can start recognizing that the blue candles are bullish and the red candles are bearish. Okay. Here's the price break. It attempted the change of direction because here's structure. How do I know it's structure? Because when the price came here, it bounced back up and then it came back. But as you can see, it cannot go lower yet until this candle. I would say here, this candle right here. It finally closed below. But just because it closed below, okay, how was the displacement? It was weak. And at first glance, this looks like a real, shift. But now ask yourself, what happens after the break? This was a break. What happened? It literally continued going higher. We don't want that because our strategy is a reversal. Well, we actually wanted maybe for the price to come back here and then continue selling. Okay. So, what I need you to look at on this image, I need you to look at the break first here. Then the weak continuation. This. And the break happened, but control never stabilized. That was the problem. That was the problem. Make sure you take that screenshot. Okay, so now let's talk about it. So breaks with no continuation returns to previous range. Weak or unclear displacement, nothing actually changed. This is a fake change of direction. Why? Because displacement was weak, continuation was unclear, price returned back to the old range. That means behavior did not hold. If you can avoid reacting to weak behavior, you are becoming someone who trades with discipline instead of emotions. Okay, so now that we learned the fake, let's learn the real. This one, you will have a strong displacement, a clean break hold, and then a continuation confirmed. All right, so we still have our range. We still have that liquidity sweep. We still had a displacement, but remember this displacement. You see these long bearish candles. The other one, it had bearish and bullish candles going back and forth. It was not clear, but this is strong. You can clearly see how strong this is. And then don't forget, here is your vocabulary if you don't know it. And I want you to pay attention to this too. So now that you see the difference, and I want you to just compare this one carefully. Remember, this time this displacement is stronger, the break is cleaner, and price continues afterwards, continues going down. Now don't get me wrong, it did retrace back, but that's just real market. And I want you to see a real market move. The market does not make perfect moves. But what did happen, it did eventually make that lower low. And we needed to know that, because that confirmed that sellers are in control still. Take your screenshot. Okay, let's explain it. Strong displacement before, clear breaks. Okay, price holds and continues. control actually shifted. So amazing. This is what a stronger change of direction looks like. You notice that price didn't immediately collapse, it didn't stop. Movement stayed clean, continuation remained clear. And this is important because the continuation confirms the break. So let's do a side by side comparison, okay? Because one breaks, but one holds. This is your fake. Please make sure you know that it's up here. Fake change of direction. Your real change of direction. Now your brain should start seeing the difference. Both charts broke, meaning having a liquidity sweep, but only one chart showed sustained behavior afterwards. And that's the entire lesson right there. That's the entire lesson. So one is weak, the other is strong. One price returns, the other one, the price stays. There's no new structure, new structure. And then broken level does not hold, but it did here. And then the traders who enter, they get trapped and they lose their money. But because you're patient, you get rewarded. And then I do want to be transparent, not all the time. Sometimes your model is 100% right, but sometimes the market just don't care. It will do whatever the market wants to do. It does not owe you, myself, or anybody else anything. And that's what makes trading so fun, is because no one controls the market. Now they can manipulate it, but truly nobody knows what the market will do. All right. So, let's update your thinking. You know we have a liquidity, sweep, displacement, change of direction. So now that we have updated the sequence, you may have thought that the break was the setup, which I'm talking about the strong displacement when that strong candle happened. But no. Now your thinking becomes liquidity, sweep, displacement, change of direction. The sequence matters because context creates clarity. You must know it. Let me go back to that picture again. Right here. So what I was saying, and this is for my visual learners, you may thought after this strong displacement, that was all you needed to enter. No, that's not all you needed. And if you would have entered down here to sell, this is a prime example. I'm happy I went back. Guess what happened? It reversed back a little bit. And maybe your stop loss was up there. That's why you wait. You wait to have that confirmation. And you have a strategy. All right. The break is not the decision. What happens after is the decision. That's basically what I was just telling you. This is probably the biggest shift from today. The break itself is not the trade. It's not. The behavior after the break or the displacement is what tells you whether the market actually changed. Screenshot this so you remember. Most traders enter at the break. That's where they lose. But why? Why do traders lose here? Because they react emotionally to movement. They think it broke. Oh, I'm late. I need to enter right now. But that type of urgency creates bad decisions. So let's reframe it. Let's change your mind. Fast reactions are not the same as good decisions. We don't move quickly. We take our time and we go through the model. Now, your role, because the more that we keep going in this lesson, the more I'm taking my hands off of it, and it's about to be your turn. Okay, so this is what you need. Okay, this is your role, your job. You do not react, you wait and evaluate. Your role is changing now. You're no longer guessing, you are observing behavior and classifying quality. If you can wait without forcing trades, you are becoming someone who thinks before acting. And that changes the whole game. You will see just new ideas and new confirmations in your mind. All those doubts that you may have, take your time. Trading is a whole skill. It's not just going to come naturally. It's not. You have to work for it. But what is so cool? Everyone starts at zero. So if you see the most successful person in the world trading, that can be you. But you must have this foundation. You must have it. And just one more thing, okay, before I send you off. Let's talk about confusion, because we broke down fake change of direction, real change of direction. But what if you still confused? What if the market is moving sideways? That is what we call consolidation. So now you have all three different perspectives that the market can give you. A fake change of direction, you just learned it. A real change of direction, you just learned it. But then what happens when the market is moving sideways? This is your last one. You got this. All right. So after the break, let me move this over. All right, right here. And you see you have the liquidity sweep. Okay. And nothing is confirmed yet. And this picture is extremely important. Why? Because this is where most people lose patience. Price broke, but now movement becomes choppy, it's unclear, it's inconsistent. So what do? We wait. You wait. What you need to do, okay? Mark it up. Mark up where is the consolidation, that unclear movement. And again, for my people who don't know these vocabulary, look here. Mark it up. And then just be real. The market can only do two things. It can either buy or sell when it breaks out the consolidation area. In this case, the market decided to do what? You tell me. It decided to buy for the breakout. Just remember, a break alone is not enough. If you don't learn anything else in my lesson today, a break alone is not enough. Okay, now this is for you, your job, because you're about to leave. Here is your framework. I already did it, so now I need you to screenshot this. It tells you exactly what to do when you're on your chart. I did the model for you. I did the thinking for you. Literally, this is what you're doing. This is what you're creating. And our last step in our model is our order block. We will learn that soon. But this is what you're looking for. You already learned about liquidity sweeps. You already learned about displacement. You just learned about a change of direction when it goes past the structure, meaning you see all these touches down here. So here you can see that the market continue going past that area when in the past it couldn't. And it will be the same way at the top. Now, if this market would have continued going higher, well, no, I'm not even gonna say that because you need a liquidity sweep. So I'm not even gonna confuse you about that. Just remember your sequence is Liquidity is always first. Your sweep, which is this. Displacement, the box. The return, here, plus your entry. Okay? But don't forget to change your direction. So, this is your framework now. Step 1, observe. Where's liquidity? What changed? Step 2, validate, meaning check it. Was displacement strong? Did behavior shift? Step 3, what type of trade was this? Was it an A plus? All of the framework was present? Was it a B plus? You confirmed, but maybe the displacement was a little bit weaker. Or was it a no trade? You're going to wait. What if you don't know what a no trade would be? Here, the weak displacement in mid-range. If you don't know what mid-range is, don't worry about that yet. I will teach you. Choppy movement. We just saw that with the consolidation. No structure shift, meaning there is no change of direction. Okay, and then your final filter. Was it clear or did you force it? Was it strong or was it weak? Was it A plus or not? If it's unclear, then wait. Make sure you screenshot that. All right, guys. So now this is your turn. This is what you're going to practice before you go into the market. Make sure you screenshot this. You already screenshot the last picture of what the model will look like. But remember, you're not copying, you're learning. So only use that model after you at least try. And I mean try hard. Because I already showed you. So it's already there. And then when you go back into the market, use that framework that I showed you. Okay? So here's your practice that you're going to practice before you go into the market. Remember, your questions. Did it hold or did it fail? You are thinking now. You're not predicting. So observe that behavior and ask those questions. Because the market always reveals information after the move. Always after. Okay. So, the goal is not to react faster. The goal is to understand behavior more clearly. Because the behavior does not hold, then nothing actually changed. And once you understand that, your decisions become clearer, calmer, and more structured. Built directly from Nueva Voz ecosystem, we have learned all that we needed to learn about change of directions. I hope that this video served you very well. I hope that you learn from it. Take your time, okay? Read through the presentation, read through the pictures, because I don't make this so that you can watch one time. Watch it over and over, because the more that you rewatch it, the more you're going to be like, oh wow, I didn't see that last time. Oh wow, that really helped me. It's those oh wow moments, okay? So I hope that you have an amazing day. Don't forget to comment one thing that you learned today. Thank you so much for tuning in. See you next week.